Assalamualaikum warahmatullahi wabarakatuh. We are from Group 3. We we want presenting our assignment on modeling and dynamics of asset price and Monte Carlo simulation in numerical methods in finance. Table of contents. We have two tasks given, task A and task B. Task A, basic financial assets.
Task A, basic financial asset. Financial asset is a liquid asset that gets in its value from a contractual right or ownership claim. The example of financial assets are cash, stock, bond, mutual fund, and bank deposit. We classify the fundamental securities as bond, stock, and derivative. Bond. Bond is a fixed income instrument that represents a loan made by an investor to a borrower and that typically corporate or governmental. Bond work when companies or other entities need money for new project or maintain ongoing operation. They may issue bond directly to investor. Characteristic of bond: face value or known as par value. Money amount the bond will be worth at maturity, and it also can be the reference amount the bond issue used when calculating the interest payment. Coupon rate: the rate of interest the bond issue will pay on the face value of the bond, and it is expressed as a percentage. Coupon date: date that the bond issue will make interest payment, and the payment can be made in any interval, but usually the standard payment are semi-annual payment. The advantage of payment is to receive income through the interest payment, get the profit if we resell the bond at a higher price, and we can hold the bond to maturity, hence we will get all the principal back. Stock. Stock entitle the owner to a share of the issuing firm. Stock are limited liability asset, which is it is worth if the stock price goes to zero, and it will make all the investment loss. Difference between stock and bond are: stock are treated as equity instrument, while bond are debt instrument. The risk factor in stock is high because the returns are not fixed or proportional, while bond have fixed return, making them less risky. Stock are issued by various companies, while bonds are issued by corporate, government institution, financial institution, and so on. Some formula of total return and rate of return are below. Derivative. Derivative is a type of financial contract whose value is independent on an underlying asset. Proof of asset or benchmark. A derivative is a complete type of financial security that is between the two or more parties. Have two classes which are lock and option. Lock product tend to the respective parties to buy and sell a certain asset in a certain quantity at a certain date T and at a fixed forward price F. Option offer the holder the right but not the obligation to buy or sell the underlying asset or security at a specific price. If we have ST greater than K, then it's called call option is in the money. If ST less than K, call option out of money, and ST equal to K, call option at the money.
The modeling and dynamic of asset prices in finance and economics. For more complex portfolio management models, we do need a dynamic model of asset prices. This is also required to solve option pricing models. A model of dynamics of assets prices must reflect the random nature of price movement, and the assets price ST must be described as a stochastic process. This could be a discrete or a continuous time process. It turns out that for option pricing purposes, a continuous time model is most useful, based on random walks. This section deals with modeling asset prices as stochastic processes in continuous time, which will lead us to consider stochastic differential equations as stochastic integrals.
Next, for the example that we choose from the article Numerical Method in Finance, we choose for example 1. It is about the problem of bond portfolio management, about how to shape a portfolio with a given duration and convexity. Okay, first, we assume that we have a set of 3 bonds and we want to determine a set of portfolio with W1, W2 and W3, one for each bond. The formula is as shown in the slide, and the variables assigned where Ci and Di are the bond convexities and durations respectively, and I is equal to 1, 2 and 3. The explanation of this problem, we first assume that the duration and convexity of the portfolio can both be calculated as weight combinations of the bond characteristics as a rough approximation, because this situation rarely occur in the real situation, so we just assume it as a rough approximation. Simply computing the coefficient of C1 and Ci and Di, and resolving a system of 3 equations with 3 unknowns is all that is required. This is the MATLAB script, MATLAB coding. So the coding is shown in the slide, where we use the value of settled maturities, settled date, maturities date, coupon rates, yields, and then compute the duration and convexity using the boundary and bond conv command in MATLAB, and compute the portfolio width, and then we will get the result as shown in the slide. We can sell bond too short, which may not be feasible as it has a negative value.
Example 2, geometric Brownian motion. The basic model of stock price in mathematical financial is geometric Brownian motion. The solution of the following stochastic differential equation SDE as follows, where mu is drift, also linked as a return, and sigma is volatility, also linked as a standard deviation. The equation. The asset in a year long with n equal to 215 stat and 100 puff have a return 8% and sigma 0.25 over square root of 215. So we can represent market model using GBM object using MATLAB, where you can see the return we get is 0.00032 and the sigma is 0.0158114. Hence, the geometric Brownian motion model as shown in the slide. So, it can use the exact solution to the stochastic differential equation. The dynamic of the GBM are described by the following stochastic differential equation using a MATLAB. First, given the daily parameter for a year-long simulation in the equation given. Second, we get the BM starting with 0 and use it obtain the GBM starting with S0. Hence, after we got all this, we can get the path of the GBM as you can see in the slide given.
For task B, quantitative decision making in land banking, Monte Carlo simulation for China's real estate developers. This is the article that we found in the internet. For the introduction, in many developing nations, including China and India, the real estate sector is among those with the fastest expansion rates. China's real estate market has undergone numerous reforms, from providing housing as a component of its social welfare system to the current capitalist model based on supply and demand. Due to this reform and the lack of available land for development in China's urban centers, many Chinese real estate companies have turned to land banking as a means of securing land for upcoming developments. Land speculation is prohibited in China, and the real estate developers' ability to expand and conduct business in the future will be helped if they don't buy suitable land now. In this journal, a decision-making model for real estate developments, land banking, choice, and tactics is developed. The study examined our decision model using mathematical modeling and Monte Carlo simulation, and it further validated its findings by simulating China Vacancio Ltd as a case study. Additionally, it supports real estate business in their decision-making processes in the modern dynamic real estate market. Problem statement. There are 4 problem statements in this article. First, China struggles with urban housing difficulty such as a shortage of available land. Second, China previously only permitted institutionally housing arrangements and only started the open up to private real estate developments in the late 1990s. Lack of land banking harms real estate developers' sustainable growth and reduce their ability to compete. And for the last problem statement is lack of transparency in the purchase of land use rights become a significant obstacle to the establishment of a genuine land market value and resulted in rent seeking, corruption, windfall gains, and the loss of state-owned assets.
Research model and methodology. First, the process of land banking. Land banking is an inventor for private land development enterprises where it includes purchase of land use right, land banking, land development shows in the figure below. First, we have the demand for land, then land use right market. And then we have system of land banking inventor where first purchase of land, second land banking, third land development, and then real estate market, and the cycle is continuous as you can see in the figure. For the system of land banking inventory, first purchase of land use right. In the primary land market, private land development enterprises has acquired land use right by bid, acquired control on agricultural land transfer, and the government's basic policy of selling land at public bid to the highest bidder are driving up the price of land use right in China. And then we have land banking. The demand for land is a derived demand where land has value only because it enables production or consumption of goods and service. If demand for residential development increases, the demand for the land will increase as well. The amount of land banking at one period depends on the expected amount of houses sold at the next period. Third, we have land development. Land development should be matched with the growth speed of real estate enterprise. Land development scale increase as the growth index increase. The market principle of real estate enterprises is low buy, high sell, where to increase land banking scale at the relative low price at market depreciation period and to keep a stable land banking scale and accelerate the land developing speed when the market goes up. Next. The second model is quantitative decision-making model on land banking. The prediction of land selling growth of the next development cycle determine the decision-making of current land banking strategy. Considering the land selling growth is usually affected by external factors such as policy risk and etc. The following formulas the quantitative decision-making model on land banking for private land development enterprises. First, we have the formula where the safety range of land banking scale in order to maintain sustainable development of real estate enterprise, as you can see. Second, the second formula is real estate enterprises have to develop certain land areas to provide enough house sales area during the next development cycle. The current quota of land area that should be developed in is shown as follows. The third model is when we do the Monte Carlo method. The Monte Carlo method is a powerful tool in many fields and recently decision making in real estate study. The algorithm based on the Monte Carlo method is able to give statistical estimate for any linear functional of solution by performing random sampling of a certain random variable whose mathematical expectation is desired functional. There are two main directions in development and study of Monte Carlo algorithm. First, we have Monte Carlo simulation, and second, we have Monte Carlo numerical algorithm. In this paper, we adopt Monte Carlo simulation to simulate the decision making on land banking for real estate developer. Monte Carlo simulation is used as tool for choosing one of many different possible outcomes of a particular process. It could be considered as a method for solving probabilistic problem using some kind of simulation of random variable or random field. Using Monte Carlo simulation, we could obtain an unbiased and consistent point estimator. Next. Here is the step for Monte Carlo simulation performed in this paper. First step, determine the distribution function for each uncertainty through the history data. Second step, allocate a random number for each uncertainty. For each uncertain variable, to generate a random number, obey the distribution which is determined in step 1. It can change the sample size and the simulating frequency to aggregate accurate rate. And the last step is, according to simulation result, statistic the frequency of occurrence and draw the frequency diagram for obtained utilities.
For case study, the simulation is projected based on the case study on China Vanke Co. Ltd., which was founded in 1984 with real estate as its major business. It is one of the leading enterprises of the Chinese residential housing business. In 2009, the total housing sales area of Vanke was 6,636 km², and the total housing sales amount was 63.42 billion RMB, which is $1 is approximate to 6.39 RMB, with growth rate of 19.1% and 32.5% over the same period last year respectively. Due to Vanke's recent successes, Vanke's land banking strategy was fast in, fast out, has been imitated by many other Chinese real estate enterprises. Therefore, this paper used Vanke as the case to establish a quantitative decision-making model of land banking based on Monte Carlo simulation method, which is perceived to be able to improve the decision-making process of real estate enterprises. Probability distribution of sales growth rate and that of the plot ratio. Sales growth. According to the information gathered of Vanke's housing sales monthly between January 2007 to April 2010 by using the fit tool of MATLAB, the data distribution has been examined as shown in Table 1. The result shows that x plus 0.0164797 over 0.30016 obeys t student with parameter 1.89, where x is the monthly housing sales growth. Furthermore, the Kolmogorov-Smirnov test is adopted to test the goodness of fit, and the result indicates significant distribution fitting. H is equal to 0, P is equal to 0.7053. Flood ratio. The flood ratio in Chinese cities is created and governed by the administrative agency of city planning. In determining the specific flood ratio for a project, the city planning administrative departments rely primarily on relevant laws and regulations, while also taking into account the overall city planning and ad hoc situation of the project, such as regional position, construction type, and employing some effective statistical method. The recommended flood ratio of residential house is classified into 4 types. First, less than or equal to 1 for buildings, 1.0 to 1.2 for building with 4 to 6 stories, Third is less than 2.0 for building with 7 to 9 stories. And the last one is less than 4.5 for building with 10 to 30 stories. Vanke specialized in conventional residential housing, primarily 7 to 9 stories. Based on the study above, the average plot ratio is estimated to follow a triangular distribution with a mean of 2.75 and coverage ranging from 1 to 4.5. The distribution is shown in the figure.
Next is the process of Monte Carlo simulation. Assuming that Vanke has a 30 months development cycle, the amount of land that should currently be built will depend on where people are buying houses. According to the quantitative decision-making model, the current land banking scale should meet the land demand for housing sales area in 30 months. The formula is shown in the slide where S null is equal to 63.3 and we will run the 10,000 times of MATLAB simulation. The simulation step, we can see the simulation step based on the figure 4 simulations process of land banking decision making model, where the explanation is step 1, we let j equal to 1. The initial is the original housing sales area as not equal to 63.3, and step 2, generate 36 times one random variable of land selling growth rate xi with t distribution and average plot ratio y with triangle distribution. Step 3, according to formula 1 is from the slide before. This is formula 1. And according to this formula, we will calculate the maximum and minimum land bank scale. And step 4, if j is less than 10,000, which is the total number of simulation times, we will go to the step 2. Else, we will go to the step 5, which is it will generate the output, the statistical result of the safety range of land banking scale. This is the result analysis, which will show the L-min, L-max, and the land area that needed. So the Vanke's land banking is restricted within the range 15,992 until 2241 kilometer square to maintain its sustainable development. The decision may vary depending on the stage of the development cycle, which is we will purchase land when the market is heading to a downturn, particularly at the maximum of the safety range interval Lmax, or we will speed up the development plan where the market is heading outward, particularly at the minimum of the safety range interval Lmin. On the other hand, we will need 1,455 km square of land to develop as of May 2010 to produce enough houses for the next 30 months worth of housing sales. This is a recommendation based on the journal, which is the developers should gather time series data on housing sales area, the quota of land area spended, and the land banking quota in order to use the quantitative decision making model on land banking. And the consequence, the researchers at private land development companies may contrast the outcomes of the simulation with actual events. And the significance of this action is the comparison will help developers to make decisions on land banking.
So, for conclusion and implication, this research establishes and illustrates quantitative decision-making of land banking based on Monte Carlo simulation using the case of China 1K CO. Ltd. This research used MATLAB and obtained a fitted distribution for the housing sale growth. The statistical result of the simulation also find a safety range interval of the land banking model, which indicates some suggestion for the decision makers of real estate enterprise. Important Implications these research are the topic of land banking in Chinese has been focused due to the current growth of the real estate industry in China. And second, many developing countries need land banking and these research can be used to develop relevant decision model for land banking study in their countries. And third, apply the Monte Carlo simulation method to develop a land banking decision model. Next. Limitation and future studies. The limitation is it possible to consider all the different decision factors involved in land banking and the future research can include more factors in the future. Future research can use the same method and can study on land banking in different parts of China or in other countries and can compare the result obtained with this research. So that's all from our group. Thank you.